Hi, everyone. I hope all of you are doing well. Thank you so much for joining today's webinar. My name is Leah Garrison, and I am the Strategic Relationship Liaison with RPAG. And today we have our good friends and partners at One America hosting the webinar today. And now I am pleased to introduce Kara Kidney, the Business Development Director, and Jackie Salmon, the ESOP National Leader with One America, to help us understand how ESOPs play an important role in the retirement plan discussion. Take it away, Kara.
Great. Thanks so much, Leah. And good day, everybody. For those RPAG advisors that work with us already today, thank you. And for those that aren't familiar with One America, hopefully over the course of this next hour, we provide some valuable insight to you as an advisor when you're working with retirement plans and finding solutions for your existing clients or even prospects. I think as an industry, we've done a really great job helping business owners as well as plan sponsors accumulate assets. But I think as an industry, we can do a better job of helping business owners with what their exit strategy is, of which one of those choices may be an ESOP. It's certainly a complex topic, and it's more than just a transaction, but it's a bit of a journey, if you ask me. But ESOPs are becoming more and more popular. With the change of administration and taxes most likely going up, especially corporate taxes, I think we're going to continue to see ESOPs being something of interest for business owners as they look to see what are their options when it comes time to retirement. It's a great way to help mitigate taxes. So real quick, before I introduce Jackie, on here you can see the disclosure. We assume everybody's got that down. And as Leah mentioned, we really encourage you to ask questions through either the Q&A section or the chat section. And just to make sure that everybody's chat section works, I'd love to hear from everybody. Who was your team, or maybe still is your team, there's 4 teams left, that you were cheering on during the March Madness basketball? So who was your favorite team that you were cheering on? So if you want to put that in the chat, I'd love to see who's everybody's teams are. We got Purdue, we got the Arkansas Razorbacks, the Hawkeyes, Duke, Nova, St. Peter's. All right, no March Madness for me, but cheering on Formula One. Okay, Brent, got that, great. St. Pete's, I think St. Pete's was one of the big underdogs, right? Villanova, we got the Buckeyes, so somebody must be cheering on from Ohio. All right, well, this is great to see. I myself, originally from Wisconsin, was cheering on my Badgers, but they didn't fare so well, after the first couple of rounds. So it's great that the chat feature is working. Feel free to use that as you have questions, because we do want this to be interactive. I'll be monitoring that as Jackie's speaking. So just a little bit of highlight on who Jackie is before I turn it over to her. So Jackie, she started her career over 30 years ago. She actually started as an actuary in the defined benefit space. And she later transitioned to the ESOP side over 20 years ago. And that's where she is today. And she really serves at One America as a consultative in the role of ESOPs, which includes providing education to advisors like yourself, to TPAs, to plan sponsors around this complex topic of ESOP. Here at One America, we call Jackie the queen of ESOPs, really. She, you will find out, is a wealth of knowledge, and she's here to help you. So when Jackie's not working, she enjoys spending time with her husband and 2 grown children, and is based in Indianapolis, Indiana. And when Jackie's not working, she's either enjoying spending time with her family, or you can actually find her out on the golf course on those nice sunny days. And I know if you're in the Midwest, you're really hoping for some warmer sunny days. And Jackie is too, as she's getting anxious to be out on the golf course. So without further ado, I want to turn it over to Jackie. The floor is yours.
Well, thank you, Kara. I'm so excited today to be with you all. And man, if I was in the room, I might jump on stage and do some one-arm push-ups or something, because I'm really super stoked to talk to you. I kind of wish we'd name this session Why ESOPs and Why Now, because we need to move past complex and really boil it down to why ESOPs and why now. I don't know if anyone watched Scottie Scheffler become the #1 in the world golfer over the weekend by winning the WGC Match Play Tournament. If you did watch it, again, it is winter in Indiana right now, so I was forced to watch golf instead of play golf. But afterward, the NBC cameras were rolling. And Scotty, of course, had to give hugs and high fives and handshakes to caddies and his playing partner, Kisner. And his wife, Meredith, came running out. And Catherine Tappan, who was with NBC, the announcer, she was trying to get him to interview. And he said, sorry, I need another minute. It so happened, here come his dad to congratulate him. And the NBC microphones caught what his dad said. And his dad said, I love you, Scotty. I'm more proud of who you are than your golf. You're a wonderful young man. You want to know why ESOPs and why now? I'm telling you that through all the turmoil that we have been in the last couple of years, people are starting to become more focused on what matters. And if you notice that there's more and more people choosing to retire than ever before, the baby boomer waterfall is happening every day. I'm hearing of someone else retiring, and a staggering 60% of all privately held businesses are owned by this group, baby boomers. And they want to know what to do with their business, and they want meaning. A few weeks ago, an advisor, I'm going to call him Larry, he called me about his client, an engineering firm that had 3 owners. 3 engineers, of course. And the oldest of the 3 owners was Jim, and Jim was ready to retire. And they were looking at options for buying him out, or what could they do to allow him to retire, but the other 2 would stay on. And from another engineering firm, they had heard about an ESOP, and they had done some research, and they had even contacted an ESOP professional. But they wanted another opinion, and they had more questions. So Larry said, would you have a call? So we got into the weeds a little bit about what are the questions and what do you think they want to know? And I asked if we could add even another professional to the call, someone I do a lot of ESOP transactions with. He's an MBA, he's an accredited senior appraiser, and he's an ESOP transaction guy. And based on the nature of the questions and what was going on, I asked if he could be on the call as well. Because in the end, guys, when you bring your situation to me, I want to move the needle. I want to add value, and I want Larry to look good for bringing us to the table. And this situation warranted even another person to be on the call. And we answered a lot of questions that day, and we really got into brass tacks about their financials and all that. And at the end, Jim, who wanted to ask a final question as we were wrapping up, he said, why are owners choosing ESOPs? What are you seeing in the market? Now, my MBA ESOP partner, he launched into case studies about the tax savings, which is a good reason. But then it was my turn to answer. And have you ever seen someone stay on the same slide for as long as I can? This is important because I'm going to get to this slide finally. Because One America has a new brochure called ESOPs for Advisors. We will be giving you a copy of this brochure after this session. And in that brochure, it covers 3 things. The first is what makes an ESOP attractive. And we've got 9 elements that makes it attractive. We also cover in that who's a candidate, who's a good candidate. And we also cover the ESOP process, which advisors want to know about. So under this, in this brochure, which you'll get, in these 9 reasons, here's the top 2 that I said to Jim. I said, number 1, it's a good option for an owner or owners looking to sell while maintaining a legacy. Let me tell you something. This is a successful firm. People are saying, I want to move from success to significance. And that's what a legacy can do. Then I said the second bullet of the 9 that's on our brochure says ESOP keep jobs in the community, likely where these 3 owners live, and it preserves the company culture. Well, when I paused, Jim said, yep, that's why I want to do an ESOP.
So we always like to get a good feel for our audience and your experiences working in the ESOP space. So we do have a couple of poll questions throughout the webinar just to get a gauge for your understanding on this. So let me just pull up the first poll question here. Give me one moment. And actually, Leah, if you're able to submit that.
Yes. Can everyone see it?
Yep, so we can see it. If everybody can answer this poll question, what has your experience been working with ESOPs? I have not worked with ESOP plans. Our firm has a few ESOP clients and we love working with them. Our firm has a few ESOP clients, however, we found it to be complex, or we have several ESOP clients. So we'll just take a minute here and have everybody fill out the poll question, and the numbers are still moving quite a bit here. So we're just gonna wait another second. Okay, so it looks like based on those of you that are with us today, 39% of you on the call, and we've got a pretty big group here, have not worked with ESOP plans. 41% of you, your firm has a few ESOP clients today and you love working with them. 14% of you said our firm has a few ESOPs and have found it to be a bit complex. And 6% of you said we have several ESOP clients. So that's great because it kind of all across the board for the vast majority of you, it looks like you either have a few clients or you haven't worked with it. So that's good for us to know as well, just based on your experiences. So now I'm going to let Jackie take it away and get a little bit deeper into the ESOP space.
All right. So what are the options for you, the owners that you know? By this time, you should be thinking of all kinds of people who own businesses. It could be your clients. It could be someone in your family. It could be your neighbor, people at church that you know. It's endless. And you need to understand that they don't have a lot of options. First of all, they can close and liquidate, which is probably not smart for anybody that's got a good business, right? That's only for the ones that are really not doing well. They could sell to a competitor, like a strategic buyer, a private equity firm. And you all know that if you sell, you will pay capital gains taxes on the difference between your cost basis and the price you get. You could sell or do an installment sale to family members or management. And if I pause there for a second, selling to a management in installment sales, let's say you're selling and the manager is going to give you a payment out of the profits of the company and you're going to take payments. They're taxed on the profit and then you're taxed on the payment. So why would you do something that's, double tax? Single taxes are bad enough, much less double taxes. You've got gifts of stock you could do, family limited partnership. You just keep going and don't do any planning and just go until you die. Or really, you do an ESOP, or it could be a combination. So those are really kind of the big picture options that are available. Now, if we had some people, it's a pretty big hefty number that really didn't have any ESOP back, knowledge. So we always want to start with, what is an ESOP? Make sure we're on the same page. I do highlight the word here, employee stock ownership plan. It's not a stock options plan. I will get calls and they're really talking about stock options. That's completely different because this is a qualified plan. Happens to be a qualified defined contribution plan like a 401k, but it invests primarily in the stock of the company. Now today, we are focused on privately held companies. Yes, public companies do ESOPs and banks do ESOPs, but today we're talking about privately held company ESOPs. The ESOP has similar tax reporting and disclosure attributes of a 401k. So they must be in compliance with IRS and DOL, just like the 401k, but they're different in that the company can borrow the money, loan it to the ESOP, and that would be prohibited with a 401k. You can't have any borrowing between the company and a 401k. So they allow that in the ESOP world, and that makes it a very powerful tool. But the reason I'm in it to win it is used to create that liquidity and succession plan for the owners, like Jim, while simultaneously providing that powerful employee benefit. Here's a few of the national ESOPs. I've been to King Arthur Flower way up here in Vermont. And I like to say my two grown boys, with being around a lot more over the period of time over COVID, ate us out of house and home, but Cliff Bars came in real handy, but those are good to know. Here's some information about ESOPs across the US. 6,700, more than 14 million participants. The companies that are doing ESOPs, very diverse. You'll see down across the bottom here, manufacturing, engineering, construction, banking. Those are common industries. Companies have a huge range in size from very small to 250,000 employees. Here's a graph, Midwest, the West, the South, and the Northeast. Looks like the Midwest is winning, probably because of all the manufacturing that we do out here in the Midwest. And then the number of participant breakdown, when you look over here on the right, up to 50 participants, 36% of the plans, then 21 from another 21% from 51 to 100. Well, there's more than 50% of them right there, up to 100. You throw in up to 300, now you're at 80% of all ESOPs. Companies with 300 or fewer employees. Some good statistics. So why are you hearing it more? The boomers now are 58 that I talked about at the beginning. It is the only way to sell your business and defer the capital gains, in case you didn't know that. I'll talk about that a little more on a future slide. There's a flexible timetable. So Jim can go and his other two partners can stay, or they could all stay for a while longer, or they could all go. It's flexible. That's one of the beauties for ESOPs, is that flexible timetable for the selling shareholders. If you sell to a competitor and you're the owner, you're out. They don't really want you calling the shots anymore. They're going to call the shots, right? You can integrate ESOPs with non-qual plans, with charitable planning, and even with family gifting. I've seen a very powerful use under family gifting with an ESOP. It's good to know, and I can talk to you about that if you have something like that. Then you have the tax savings for the company, which can be so big that it increases the cash flow naturally. It allows you to pay off the debt. It allows you to buy other companies. A lot of people do it to buy other companies, and it gives you the cash flow to buy the stock from the terminating participants. Remember, it's private stock. There's no market out there for it. So the company's on the hook to buy out terminating and retiring participants. That's called the repurchase obligation. You'll hear me talk about that word, those two words later. But in the end, the potential for positive economic impact for employees and the enhanced culture, that's what I absolutely love about ESOPs. So what makes them more attractive? Tax benefits. It's a trifecta. Company, seller, employees, or seller, company, employees. Everything, everybody gets tax benefit. You can do this borrowing that I mentioned. You've got liquidity for the owner, diversification for the owner. Remember, Jim, a lot of his assets are tied up in the business, and he needs to diversify now that he's going to retire. It retains the culture, it keeps the jobs in the community, and it attracts, retains, and motivates employees and key management. All things that are critically important right now. Now here's a slide if you're taking notes, and we will send you this presentation later if you're not, that's all good. Here's who you're looking for. Here's, if you're thinking about your neighbor or your family member or your client, here is who you're looking for. These are the ideal candidates. They are C or S corporations. They have an owner, at least 50 looking to retire. They have making money, EBITDA, not revenue. This is what are they keeping, pre-tax profits of at least 250,000. And really that's very low because it's the tax savings on those earnings that are buying the services to do the ESOP. Okay. So that's pretty low to create that. You might have about 60,000 of tax savings with the ESOP with 250,000 of EBITDA. That's enough, but it starts to get pretty narrow down in that range. You want an owner with a reasonable valuation expectation. If you've got an owner and he thinks he's worth 20 million, and then the independent appraiser, so an ESOP is valued by an independent appraiser, and it's approved by the trustee. And that independent appraiser is arm's length. He determines that value. And the trustee looks at all of his numbers and says, okay, I agree with that. It's not what the owner has in his mind that he's worth. So you've got to be fairly close there or you won't get an ESOP done. You don't want it to be a startup. You want about 20 or more employees and about $1 million in payroll. You need a management team or the willingness to create one. And then you consider your business a legacy, or you want it to be a legacy to the employees and the community.
And Jackie, before you jump into this, and I think this question will be answered in a couple slides. Austin had a question, what recourse do we have for owners that sell to ESOP and need to buy a 1040 to QRP? And I think in a couple of slides, you'll be talking about that a little bit more. So
on this one right here.
Yep, there you go. So Austin, you were predicting what the next slide was going to be.
Yeah, good question. And I'm letting you monitor the chat, Kara. So there's two types of corporations I mentioned, S Corps and C Corps. Let's take the S Corp first. So I assume you've heard by now, and if you don't, and if you're faded away or you're not paying attention, come to me right now because you need to know that a 100% S corporation ESOP is paying no federal taxes as a corporation and mostly no state taxes. There's a few exceptions on the state side, but no taxes as a corporation, 100% S Corp ESOP. You've got to be kidding me. A lot of activity there. And the seller can go ahead and participate in the ESOP. But when they first allowed S Corps to be ESOPs, which believe it or not was 1998. So it started out as only C Corps. 1998, Congress said, okay, we'll let an S Corp be an ESOP. And the accountants went nuts because imagine all the gains of the shareholder going onto their personal returns and they're paying taxes. My husband has a one-man business. His gain from his company goes on our personal tax return. That's what happens. It's called pass-through taxation. Well, when the ESOP becomes the shareholder, it's tax exempt. So accountants started setting up a bunch of really small ESOPs just to keep people like my husband with a one-man shop from paying taxes on the proceeds of the gains of the company. Well, about, 2006, they corrected it and they created some rules called 409P, which are anti-abuse rules. And in those rules, you can't be a really small S corporation ESOP. You have to have more broad ownership. I'm not going to get in the weeds on it, but suffice it to say, anything under maybe 25 lives, certainly 20, we're going to be doing a preliminary look at that test before you'd ever do a transaction. But let's go over now to C Corp. And don't worry if the company is an S. Sometimes people revoke their S election and become a C just to do what I'm about to talk about, which is what the question was about. So remember, I mentioned you can do a capital gain tax deferral. And if you sell as a C corporation, if you sell your at least 30% of your shares to the ESOP, you can do something called a 1042 rollover. It's kind of like the thing in real estate where you buy another house and you avoid some taxes. I may say that incorrectly. The accountants, I never say it correctly for the accountants, but I'm not a real estate expert. I'm talking about an ESOP. You can defer the capital gain taxes. And in fact, right now, as the law stands, if you were to do that, and then you were to pass away, your wife would get, if you're a male business owner, would get a step up in basis, and you would have eliminated the capital gains taxes. But the seller can't have his cake and eat it too. So he cannot be in the ESOP if he takes the 1042. So again, you have to be a C Corp. The ESOP has to hold 30% of the value of all the stock issued by the corporation after the sale. And then within 12 months, you have to take the proceeds and buy what's called QRP, which is what was being referred to in the question, qualified replacement property. Now, qualified replacement property is made up of usually three things: stocks, bonds of U.S. companies, or something called floating rate notes. And all of that is probably a little too deep for this session. But usually if you're going to buy floating rate notes, you as the advisor, so I had one and the owner was selling 60 million for 60 million. They sold 30% to the ESOP and the seller had $60 million. And the advisor I was working with, like you, actually partnered with Morgan Stanley, who sells the floating rate notes. But after they buy the floating rate notes, they borrow 85% of that money. And then now the advisor invests that in whatever you want to invest it in. So call it 50 million of it was then given to the advisor to invest wherever he wanted, because they borrow against the floating rate notes in order for you to invest how you want. But you have to partner with a firm that sells floating rate notes and be willing to do that to get that advantage. Because stocks and bonds that you buy, it's a buy and hold. Now you don't have to buy, let's say you sell 30% and it's 10 million. You don't have to spend the whole 10 million to in the qualified replacement property. Let's say you want to spend a couple million and build a house. That's fine. You only have to invest however much you want to invest, but it is a buy and hold in U.S. domiciled company stocks and bonds. So for now, that's how I'm going to answer that question. But if the person wants to call me later and I'm not monitoring the chat, they absolutely can do that and we can get more granular. Okay. The other thing
Jackie,
about
real quick. Oh,
okay.
And Jackie, real quick. And so Austin, yeah, we can definitely connect you with Jackie. And I did have another question come through here. And Connor, your question is, what's in it for an advisor? We're actually in a couple of slides going to talk about specifically what's in it for you as advisor. So stay tuned. I see your question there.
Yeah. Another thing about being a C Corp is you can use two classes of stock, preferred and common. And a preferred stock transaction gives you a valuation premium, and dividends can be a separate deduction if you use them for the loan payments. So I'm getting in a little bit of the weeds now, but there's a good reason to consider either S or C, and a good ESOP transaction person gives you what's called a feasibility study and shows you the difference and helps you make a choice. And real quick, before I get on to what is good for advisors, I wanted to point out right here in the middle of this slide, something you may not realize, because when I first told the owner of an Ace Hardware who sold to an ESOP, he couldn't believe his ears. So a lot of times a bank loans the money to the company, then the company loans it to the ESOP. The ESOP gives the money to the shareholder, and the shareholder gives them the ESOP the shares, and they sit in an escrow account initially. And what happens is the company will write a check to the ESOP. Let's say it's for $500,000, but the ESOP turns around and gives the money right back to the company because they have a loan there and they have to make a loan payment. So it's what you call a non-cash expense. The money went into the ESOP and came right back to the company. Unlike a match or something else where it goes in and stays, this money goes in and out. That's how you develop the deduction. And then you can turn around and make a bank payment with it. It's crazy, guys, but it's the best thing ever. Now let's get into, we'll stop and do the poll.
And Jackie, real quick before the next poll here, there was one other question around the QRP. And the question was, what about a stock screen for QRP?
Okay. I know there's a place called, the name of it's going to leave me. There are some alternative investments, and I would have to refer you on that subject.
So Austin, we can follow up with you on that afterwards. But so in interest of time, let's move along here and have the next poll question be shown. And if everybody could take a minute to answer the poll, and we'll have Leah push that out for us. When should you, as an advisor, get involved in an ESOP discussion with your business owner client? After the business owner spends money for the ESOP feasibility, you should never discuss, it's too complicated. When you review the 401k by asking the owner, what is your exit plan? Or only if your client asks you about it. So this is kind of a little bit of teaser for what we're going to share about why you as an advisor want to get involved. So Connor, I think we'll be able to answer your question, but if everybody can take a minute. All right. You know what? At the moment here, everything, I think we got an A. You're right. A+ here. Everybody has answered with the same answer. And you're exactly right. When should you get involved with an ESOP discussion with your business owner client? It's really when you're reviewing the 401k, when you're doing that annual review, and you should be asking them, you know, what is your exit plan, especially if they have 5 to 7 years before they're ready to retire. So now Jackie's going to go into a little bit more about you as an advisor and why this is so important as you're incorporating content around the 401k.
So what's in it for you, advisors? Why are we talking about it? First of all, there's kind of two categories, whether you might already have a 401k client or you might be prospecting. So with your existing clients, a very simple question is, what's your exit plan? And I've seen that lead to ESOP transactions, and we can help you with that. Sometimes they say, I don't know, can you help me? But also with your 401k clients, let me tell you something, it's going to happen. They're going to say to you, we're considering it, we're going to do it, and you need to be armed and ready to understand it. And I take those calls sometimes of panicked ESOP panicked 401k advisor. What does this mean? And, you know, just understand that we can handle record keeping for both plans. You can say, I know someone that's an expert in this area. If you want to work with a TPA that has the expertise, because they'll be looking for a TPA for the ESOP, which we do at One America. And there's kind of a short list out there of who can record keep them. And it's nice to know you can work with someone that can put both the 401k and the ESOP on the same platform. And don't panic too when they tell you they're going to do it. I had one advisor call and say, oh my gosh, are they going to spend the 401k money and close it down? And that was a big no. So don't worry about that. And then for prospecting, you can certainly look around in your area for ESOP companies, and then you can look up their 401ks on on eFast or wherever you look up 5500 information, and you can look and see, and you can check in with them. How's it going? Do you have combined administration and bundled administration? Do you have good consulting? How's your timing going? Do you have any headaches? And certainly open the door looking for ESOP companies, because they almost all have 401ks. And you can talk to owners in general that maybe are not clients, again, neighbors, family, all kinds of people, and discuss ESOP, because if they're owners, they most likely already have a K plan that you could get in on.
Hey, Jackie.
Yes.
Real quick before you go to the ancillary business, we had another question come in from Suzanne, and it's a great one. And I know what your thoughts are on this. Is there a downside to adding an ESOP to an existing 401k for a company? And maybe hit on, the K-SOP versus the two separate plans.
Yeah. I'm not a huge fan of creating a K-SOP. Some people say, well, then you'd have one document, one 5500 and one audit. But all of those have arguments against it. Yeah, you have one document, but it's very complex. And they're on an average, they're over 100 pages each. Again, these with a private ESOP, it's two different animals, a balanced forward annually valued plan versus a daily valued plan. Very different mechanism. And then one 5500 versus two, who cares? Now, the one audit thing, certainly it needs to be a company that's over 120 lives, but the auditors tell me it's going to be a more expensive one audit So you're not cutting your audit bill in half. You might be cutting it by 20, 25%. But there are other things that come up. If you want to cash people out of the 401k under 5,000 and you throw the ESOP in there, now you have to look at both pieces. So it reduces the number of small cash outs you can do and get rid of people, because it immediately tosses them over the 5,000 mark. And then you have to make sure, if you don't want to allow them borrow against the ESOP, which is not liquid, that you exclude it from borrowing, you exclude it from hardships. It just starts to get pretty complicated. And I think you have fewer options with it. So I'm not a big fan of calling for the KSOP to do it together. I keep them separate. That's just my opinion.
And we've got one other question here before we go on to the next slide. I think the next slide is great for Connor to see. So the other question is, what is the average timeline for the setup before the owner can start to sell their stock?
So transactions on average, I would say, take 3 to 6 months from the beginning of the discovery and all those phases that will be in the brochure we're going to give you of how you do it, until they actually pull the trigger, because there's work to do. The accredited senior appraiser has to value the company and go visit and learn about the company and all the information. You have to look at what kind of debt load can the company support. You'll be doing maybe a feasibility study in there to show the numbers, whether you go C Corp or S Corp. So on average, 3 to 6 months, but they can take a year or more. Sometimes it's a tough decision. I had one, it was a financial firm, and he had to get something done by the because of SEC rules or something like that. So any number of things can cause a problem. You find when they get into it, they find a problem. Maybe you've got some kind of lien, or you've got too much debt, or you're still buying out an old partner, or any number of things can come up to extend it. That's a generic answer. Okay.
Great, thank you. I think we're good to move forward.
Okay. So what's in it for you advisors, besides adding value and keeping your 401k plans or finding them? Certainly the wealth management. If someone doesn't take 1042, they're going to have a lot of money, right? They sell for 10 million. Even if they pay the capital gain taxes, they're going to have millions of dollars to invest, and they will need wealth management. Number 2, there are usually insurance sales. One scenario I'm familiar with is sometimes a company doesn't have enough capacity to borrow all of the money needed to do the transaction from a bank. They don't have enough collateral. They don't have whatever reason. Well, so sellers will finance ESOP deals, transactions. And if a seller finances the transaction over 5 years, let's say, and would happen to die in that time, certainly his spouse is not going to want to step in to run the business until he or she finishes out getting paid. So that's why you sell life insurance for seller finance. There's a lot of reasons to sell insurance. Then there's an ESOP that is at least 10 years old. Participants are offered the ability to diversify 25% of their holdings in a 6-year window, and in the 6th year, up to 50% of their holdings. And that money can be rolled into 401k or IRAs, and it can be substantial more liquidity going into the 401ks or into IRAs that you would capture. There's personal planning like disability insurance, as well as long-term care. There's the future ESOP rollovers that occur. I work with a local manufacturing company here in Indianapolis, and the shop guys, they might have 100,000 in their K. They've got 400 now in their ESOP after, see how long has it been? It started in 2004. So what's that, 18 years ago? And they now have $500,000 instead of 100,000 that they would have had they only been saving in the 401k. So it can be substantial rollovers. And again, you want someone else telling them the idea, or do you want to bring it to the table? I'm telling you, it's a value add conversation. And then there are other people, centers of influence, to bring into your fold of who you're networking with, that know you for what you do, whether it's retirement advisor or what. but you've got CPAs involved here, estate planning attorneys, business brokers, investment bankers, corporate business attorneys, commercial lenders. All of these centers of influence get involved in these transactions and would like to know if you're in that market.
Yeah, and I think, Jackie, tying into what the COIs, one quick story that we've saw with an advisor actually working with a CPA firm. So there's an advisor in Fort Myers, Florida, that he was trying to get in with a CPA firm, didn't have a strong relationship, but he was looking for different avenues, of which he said, I'm going to use this opportunity to educate the CPA firm on what an ESOP is. And oh, by the way, we're going to have Jackie present. And as you can see, Jackie's a wealth of knowledge, but we're going to have Jackie present. And then we're going to be able to offer these accountants an hour of CPE credit. And, if you're like me, we love our insurance CE, people like CFP designation or CE credit. So we were able to give those attorneys, CPAs, the CPE credit that accountants like. So it was that value add that advisor could educate the accounting firm. Well, what happened out of that is over the course of a year later, the accounting firm sent this advisor 5 referrals. It started out kind of slow, but he sent him 5 referrals, and over time that could be potential ESOP candidates. And I'm not sure whatever, happened to some of them, but one of the owners that was referred over to that advisor was so impressed with that advisor. And he said, by the way, it was a construction firm, said, by the way, I have $5 million from a different business that I had sold. Can you manage this for me? So, for you, those of you advisors that do wealth management as well as retirement plans, this is a perfect example where you just never know the path that this is going to take. That advisor connected with that CPA firm, gave them, an hour of CE credit, educating them ESOPs. That CPA firm was referring leads over to that advisor, of which she got a personal wealth management client out of it. So I think there's so many opportunities, if you're a wealth management advisor, but there's how you go about it, your COIs. But then even if you're a retirement plan advisor, and that's primarily what you do, Jackie talked about the diversification rule. There's so many different ways that, over time you can roll over assets into the retirement plan. And so that's a great, example of how you can be creative. We can offer CE for these accounting firms if that's something of interest to you. Jackie, I did have a couple of questions here real quick. One of the questions was, so you talked about the different attributes of what makes up a good ESOP candidate, potentially how much in EBITDA, number of employees, number of years they've been in business plus. So once you identify, the way I understand it, once you identify that these attributes fit this client and they want to explore possibly doing an ESOP, comes a feasibility study. What do costs look like for a feasibility study?
Well, I'm going to say on average range of probably $10,000 to $25,000. And that typically, the group I work with, that's generally the first time you spend any money. You've had a couple calls, you've been exploring, you've been sharing financials and lots of good information. And the MBA that I know I work with, he's going to tell you before you ever spend money if you really should forget about it or you really should consider it. And if you should consider it, then the next step is feasibility. And I've heard him give that range, but it could certainly go higher depending on how many scenarios you want to run, or, I didn't tell you this right, now let's redo. But that's generally probably the range.
Okay. Yeah, great. And I know sometimes these numbers in 401k world seem large, but at the same time, when you think about the potential taxes that the business owner is going to, avoid or mitigate tax liability, it can really be powerful and impactful. So a couple more questions, Jackie, and then we'll move along because I want to make, in interest of time. So one of the questions was, what complexities should be considered with a firm that's considering an ESOP that only has a simple in place today and not a 401k? So they have a simple IRA, it sounds like, but not a 401k. Yeah. What needs to be considered for that?
Well, in the same calendar year, you can't have a simple and any other qualified plan. So the answer is, if they have a simple today, They'd shut it down by the end of the year, and then they can start the ESOP in 23.
And they could start the 401k and ESOP, have them together. But you're right, in the calendar year, they can't just shut down the simple today or keep the simple and add an ESOP, you're saying.
Yeah, that's the rules that I know them today. So when we hear simple, we're like, okay, work to wind that down. And then, but you've got lead time there anyway to do a deal or transaction usually. And so, but usually you have to finish out 1 year and then you can move it to the other.
And Pete, I think it's a good question to be asking now versus in October, because there's certain things you have to do to terminate that simple, and then you're scrambling. So I think it's a great time to be, understanding that now. And then this summer, start to evaluate, does it make sense to, shut the simple down at the end of the year, set up the 401k in place of the simple, and then also offer the ESOP. So one more question we have, Jackie, and then we'll move on. Would your training also meet any human resource CE credits? It's something we can look into. Typically we've done more along the insurance CE, the CFP designation, as well as the CPE for accountants. But we have started to explore a little bit more for around the SHRM CE, and I've been pretty close to that. So I can always follow up with you on that. So I love it. I love that there are so many questions. This is great. So Jackie, I'm going to have you keep moving forward because I want to make sure we end on the hour here.
Yeah, I wanted to insert a few new things that are going on that maybe you should all know about. The first is there are now SBA loans available to do ESOP transactions. Well, this is news because it's easier to get loans with less collateral and with that less personal guarantees and with longer terms. So it's kind of brand new. Now, the guy I've mentioned him several times, the MBA ESOP transaction guy that I know, he's kind of out on the cutting edge of this and has had his first one closed. So just understand there might be more cash available at closing because the SBA has decided to incentivize ESOPs. And then there are states offering incentives. I don't know if any of you caught this. You probably don't follow the ESOP news like I do, but Iowa voted to not tax apply state taxes to anyone receiving an ESOP distribution. And how exciting is that? I mean, I like to see more states jump on that bandwagon. So if you get an ESOP distribution and you don't roll it over, you're taking some of the money. Iowa state taxes don't apply. I think that's a pretty cool change. And I did want to mention that ESOPs are subject to the lifetime income rules from the Secure Act, same as 401k, now how the statement's going to have to reflect a lifetime income from the balance, convert the balance to lifetime income. The same thing applies to ESOPs, just so you know, in case you weren't aware of that. So that's just some latest news updates. I'll try to have more of those in the future to tell you what's going on. As you know, everybody's knocking on the 401k door, everybody, right? This is a way to differentiate yourself, to get in the game here and get a little knowledge. And with the virtual world, I can get on calls. You can call me and we can talk about it first. I take those calls all the time. Happy to do it. Enjoy doing it. And before your owner that spends any money, we start kind of high level and we head down into the weeds as we go along, and we slowly check the things off the box, check the box for what we need to ask them about to see if they should be excluded. And if it keeps going, they should be included, then we start bringing in more professionals. It can lead to feasibility. And then remember, we can do this CE for centers of influence if you're interested. And I wanted to mention real quick about the 401k. We always promote the 401k. We would never say when this one advisor thought it was the 401k was going to go if they start an ESOP. You really need both. It's just more wealth in retirement. It diversifies your holdings because ESOP is primarily the stock of your company. And then there's a balance of timing on the payouts. I like to joke for private ESOPs, there's another way you can spell ESOP, and that is SLOW. ESOPs are slow to pay. Stock is valued once a year, and they make you wait till the year following you retire, and then they can pay you over 5 payments. And they can make you delay paying you for 5 years if you terminate and you quit, because they don't want people quitting to get their money. So it can be very slow payout. You're going to get your money, but it's slow to pay. And that's why it's nice to have the 401k, which is more rapid. Again, I did talk to you already about combining ESOP and KSOP. If you have a specific scenario you want to talk about it, then we could, but I'm not a fan. I've even written an article. It's going to come out in the ESOP Association newsletter about it with another professional about the what you should know about doing that. And one other thing is you can use the ESOP for a match, even if the plans are separate. And you can use it for safe harbor, even if the plans are separate. So again, that's not a good reason to think you have to combine the plans. You do have combined testing and coordination. The tests that are combined for ESOPs, I don't know if I'm getting too far in the weeds, but it's top heavy 415 and 404, just so you know. And I mentioned to you that we can bundle the record keeping. Here's the services you need with an ESOP. It's kind of a lengthy list. That's why the tax savings pays for services. The ones that One America do are on the right there. Record keeping, statements, 5500, compliance testing, and the repurchase obligation study. I mentioned what is repurchase obligation if you were listening. Everything on the left we don't do, like the document. We don't do ESOP documents, trust agreement, SPD. We don't do annual appraisals. We don't do audits. We don't offer trustee services. That's a niche market in private ESOPs. And we don't do transactions or corporate services, legal services. You want to do Why One America, Kara?
Sure, I'll wrap it up and bring us home, Jackie. Okay. You know, as you can all tell, Jackie is certainly a wealth of knowledge when it comes to ESOPs. I've sat in on many calls that she's had with advisors like yourselves, just answering questions that you may have. Michael, I did see your questions as well, and we'll be sending out a document that lists out what the attributes are, what, you know, potential companies look good as far as ESOP candidates potentially go. And that's something that, you know, Jackie can work with you in your local One America contact as well. You know, I think what makes One America unique in this space is, you know, we can bring you a solution where both the ESOP and the 401k are in the same place. A lot of entities out there, the record keeper can do the 401k, but they can't do the administration for the ESOP. And so that's a benefit that we can bring, is that bundled approach. But what that means also to the plan sponsor, as well as participants, it's one service team. You have one relationship manager and one plan manager for both the 401k and ESOP. That's a big difference compared to one of our big competitors out there in the market, where you deal with two different people for the two different RMs, two different plan managers. We have the same. You know, the customized reporting, it just, everything flows so much smoother when you can have both plans in the same place. You know, participants, they get their statements for the 401k as well as the ESOP. The combined, that includes the testing that Jackie talked about, compliance testing. And I don't have to tell all of you, it's so much easier when everything's in the same place. And same with the audit reports, the repurchase liability studies that we can handle as well. So there's a lot of capabilities. That previous slide, Jackie shared, you know, some of the things that One America doesn't do. You know, there are a lot of players in this space, or it's a big team of individuals, depending on if they represent the ESOP or they represent the seller, the buyer, the trustee. There's so many different players in this space. You don't have to go in it alone. And that's where Jackie has a number of resources and references. So if we go to the next slide here, you know, we covered a lot in a short amount of time. Our last poll question, Leah, if you want to pull this up. And then right after the poll question, I'm going to give you contact information as well as just a few closing comments real quickly. So just kind of curious from all of you, what brought you to the webinar today? Was it you wanted to learn more about ESOPs? Maybe you have a business owner that might be an ESOP candidate. I know a couple of you were asking some of those questions. Or I have an existing 401k ESOP client that I need to review. We do hear some advisors say, hey, I've got the 401k one place, the ESOP in another place. It's a bit disjointed. I'd love to see how One America looks for both the ESOP and the 401k. So we can look at, you know, both plans together and share with you. Maybe they can save on costs. If you have an ESOP candidate, like I mentioned, we'll get out that piece that shows what some of the attributes are as well, because you might look at it and say, oh, you know, they they only have 5 employees. Okay, well then an ESOP might not be a great fit. So thank you everybody for answering this. We're going to go to the very last slide here where our contact information is. And so here's our contact information. Myself as the National Accounts Manager, Jackie as the expert, take down our phone numbers, take down our email addresses. If you want to scan the QR code, that email will go to myself. And then I can reach out to you as well so that we follow up with you on whatever questions that you might have. So feel free to scan that QR code. Just real quick too, I'm sure a number of you will be going to the RPAG Spring Summits. I'm so excited that they're going to be back again. I myself, I've gotten to know many of you over the years. Will be in Orange County, Nashville, and Austin. Unfortunately, I'm not able to make it to Boston, but I'm excited to see many of you there at the conference if you're able to make it. So come seek myself out. And for those of you that I've known over the years as well, you may not see me as much. I'm still at One America, but I've actually being promoted to a new position of our West Coast regional vice president. So I'll be our West Coast sales leader. So I may not be able to get to do these webinars or conferences as much, but I'm still around here at One America. Somebody will be taking over the reins for me. So I did want to let you all know, just in case you're like, what happened to Kara? Just because I'm at so many of these events. And then last real quick, this is an extra bonus for some of you, is that if you're going to Napa this next week and you don't have dinner plans, we do have a few extra spots at our dinner on Monday evening. So I'm going to put a little plug in there to reach out to me, send me an email, shoot me a text, so that we can get you a spot for dinner if you're going and you don't have a place yet. So, by all means, we'd love to see you there as well. So again, on behalf of One America, I want to thank you so much. There were so many of you on the webinar today. It's a complex topic. The ESOP's a bit of a journey. And Jackie, I want to thank you so much for sharing your wealth of knowledge with everybody today. It's certainly, I learned something new every time. And again, reach out to us if you have questions. And Leah, on behalf of One America, thank you. I want to thank RPAG for allowing us to be a part of your webinars.
Absolutely. Thank you so much. I enjoyed it so much.
Yes, thank you so much, Jackie and Kara. Congratulations, Kara, on the exciting promotion. We're definitely going to miss you, but very happy for you. And so it seems like we've got all of the questions, but you have Kara and Jackie's information. If for some reason you lost it or have questions, still feel free to reach out to me and I can put you in touch with the One America team. So thank you so much, everyone, and have a great rest of your day.